Good afternoon, September 8th. This is Trading with Teddy. We're going to talk the gold market. The theme in the gold market remains the same. We get these big, nice rallies, and then they pump the brakes and they pause a little bit. Following Friday's non-farm employment, we saw gold gap down big time, 1307, wiped out a ton of the week longs before reversing higher, through that sneaky Sunday night, Monday, Labor Day holiday, and then through Tuesday. What happened, following that? We saw a lot, and this has been the theme going back for the last year. We've seen a lot of hot money comes piling into the markets in the form of call options in both the futures and the ETF markets. And when that starts happening and you get sentiment getting to the high levels that it gets, that's an open invitation for market makers to essentially pick your pockets, and they're selling these calls at extremely juiced premiums, and that's a lot of the reason you see the sideways action. Okay, so in addition, we've got the sentiment is heated up yet again, a little correction today, but the big number, and we've been talking about this number for the last couple of months, this 1360. This is the fourth time since July 2nd that gold has come up against this long-term trend line from those 2011 highs, and it is stuck there. It is essentially like an iron or steel ceiling that we're looking at. As long as the market stays below here, gold's not going to go anywhere in a hurry, or that's our opinion anyway. Now, we get a convincing close above 1360. That's the level that not just we're looking at. It's pretty clear everybody is looking at this level, everybody in the form of big players, okay? So what has happened? They're looking at this level. Shorts, we get a big close above 1360. Shorts are going to go running from the hills. What do they do when they go running for the hills? Well, they have to buy back their positions. In addition, we're going to see the longs potentially open up new positions and come flooding in. From there, I think it's a pretty quick shot to 1420 at a minimum. But until it does get below 1360, there is a lid on this market. You can call it sentiment, you can call it hot money coming in, you can call it whatever. But this is a clearly defined level at 1360. So it sounds like I'm overemphasizing that. That's not the case at all. It needs to be emphasized as much as possible because these technicals in gold and silver, they've proven themselves for years and years and years, and they're real. They're the most legit indicators you can find in these markets. So the sample size is big enough to know that, hey, look, trust them. These are my thoughts and not those of ADM Investor Services or Archer Financial Services. Thank you.